Hey there, I'm Apple Credit from Investing Simple. In today's comparison, we're breaking down the two popular means for investing in real estate, which are Vanguard REITs and Fundrise. So these are currently two of the most popular ways to get started investing in real estate if you're not looking to purchase a property outright. So in this video, we're going to be comparing these two investments, what sets them apart from each other, and which one is going to make the most sense for you. Now, like I said, these are alternatives to investing in physical real estate. You're instead buying into a pool with other investors so you can invest collectively, purchase larger buildings with less cash outright and less responsibility. So we're talking no management of the property. You don't have to worry about that. That's all taken care of. There are very low minimums when compared to investing in real estate, and you don't have to be an accredited investor to invest in either of these options. Now let's start off by talking about Fundrise. So Fundrise is kind of the new kid on the block here and was really one of the first platforms to popularize crowdfunding real estate to the mainstream. In the past, in order to get involved in these big real estate deals, you'd have to be a pretty high net worth investor. You'd have to have some decent connections to get in on these deals. But Fundrise was like, let's change that up. Let's make this accessible to the mass market. And that's exactly what they're doing through their platform. So essentially what they did is they created this new type of investment vehicle called an e-REIT. And REITs have existed for a long time, since the 60s, and they've been a way to invest in these real estate deals without having to be an accredited investor. But Fundrise took it a step further and created this e-REIT, which is a lot more personalized and allows them to cater to a wider audience and offer a lot more attractive features than a traditional REIT does. So let's dive into what some of those are right now. So first off, e-REITs are privately traded. So Vanguard REITs and other kinds of REITs out there, they're going to be traded similar to stocks on an exchange. So you can buy and sell them on apps like Webull, Robinhood, and all of these other trading apps that you likely have on your phone. Now with Fundrise e-REITs, you're only going to be able to transact with these on the Fundrise platform. You're not able to buy and sell Fundrise REITs on any other platform out there. This does mean that your liquidity is a bit limited, so there are going to be quarterly redemption periods where you can decide if you do want to redeem any of your shares, you want to cash any of those out, but there are going to be early redemption fees. So if you want to cash out before 5 years, there are going to be some fees associated with that, which I'll throw up on the screen right now. Now, while this might seem like a con to some, it also does have its pros because it limits your ability to panic sell and it keeps the stock price or the share value of Fundrise e-REITs relatively stable compared to other types of REITs. So when you compare the returns from a Fundrise e-REIT to Vanguard REITs, you're going to notice that Fundrise tends to be a lot more stable over time. Okay, it's not swinging as much in value, it's kind of just slowly climbing upwards, anywhere from 8 to about 12% per year. While Vanguard REITs and other REITs are going to be a lot more volatile because people can panic sell, they can get in and out whenever, and so it's going to kind of mirror the stock market a lot more than a Fundrise e-REIT would. And in general, it is best to plan to hold any real estate investments for at least 5 years. So this kind of just encourages you to follow with that and make sure that you're locked in for the long term. Within an e-REIT, you're also going to get more transparency into the holdings and strategy that the fund is following, whereas with traditional REITs like Vanguard REITs, a lot of times there's not as much transparency. You can't see the exact deals that you're invested in, and it's a lot more of a black box than what you're getting with Fundrise. Now, like I mentioned, Fundrise has seen very consistent growth over time when compared to Vanguard REITs and other types of REITs in about the 9 to 12% range, where Vanguard REITs tend to sway very dramatically, kind of, like I said, mirroring the stock market a little bit more than you're going to see with your Fundrise. Now within Fundrise, you actually get to choose between a ton of different e-REITs to invest in, and they're consistently adding more to the platform. So at a basic level, you can choose if you want to be invested into a growth REIT. These are going to invest in up and coming properties. They're going to buy undervalued properties, fix them up, and sell them for more than they bought them for, and kind of optimize for finding those undervalued properties that they can add value to. You could also choose to invest in an income e-REIT that is going to specialize in buying buildings that are already cash flow positive and just adding those to the portfolio, collecting the rent checks, and sending them out to you in the form of dividends. You could go for a hybrid e-REIT that's going to be a little bit of both. They've got e-REITs that specialize in single family units or e-REITs that exclusively invest on the West Coast or in the heartland. There are so many different types of e-REITs to choose from that you can really find one that aligns with your strategy. Like I said, there's a lot more transparency here than with a kind of one-size-fits-all REIT like you might find on Vanguard. Fundrise also does offer some e-funds for more specific investing than that. So they've got e-funds that specialize in just very specific cities. So like an e-fund for DC, one for LA. And these are going to be a little bit different than e-REITs. The tax consequences are going to be a bit different, but for the full details on that, make sure to check out the article over at investingsimple.com. Now, when it comes to fees and minimums on Fundrise, there is a $500 minimum to get started, which is crazy low for investing in real estate. And there's going to be a flat 1% fee for both portfolio management and property management on the Fundrise platform. So now let's dive into Vanguard REITs, and specifically let's look at VNQ, which is kind of Vanguard's most popular real estate ETF or exchange traded fund. Now, essentially, this ETF buys shares in different types of REITs, and it's kind of a one singular holding that you could purchase to get exposure to real estate in a bunch of different areas. This REIT functions much like other REITs out there, where you are seeing growth in your investment in two different ways. So that's going to be in your income and your appreciation. So your REIT shares are going to tend to appreciate over time as the buildings that the REIT owns become more valuable. Your shares become more valuable as well. And then the income is going to come from the rent checks that your properties are generating. So the REIT purchases properties, fixes them up, rents them out to tenants. Those tenants pay the REIT, and the REIT passes that income through to you as the shareholder in the form of dividends. Now, these REITs make real estate a lot more accessible to the everyday investor because they are traded on stock exchanges just like other stocks are. So you can buy and sell these, like I said, on different platforms like Webull, where you can get 4 free stocks for Webull using the link in the description below. So make sure to check that out if you haven't yet signed up for Webull. You can buy and sell these REITs on any platform out there. You don't just have to buy them on Vanguard, because Vanguard creates these financial products, which you can then buy and sell pretty much anywhere financial products are bought and sold. Now, Vanguard's whole kind of mission statement is for low fees and making investing accessible, and their REITs are no different. So this REIT in particular, VNQ, like I mentioned, the expense ratio on this fund, or kind of the overall fee, is 0.12%, which is significantly lower than Fundrise. But again, like I said, you're not getting a lot of those advantages that you see with an e-REIT. This is just a normal REIT. And the minimum to invest in one of these is the share price of the REIT. So VNQ is currently trading around $85 per share. So as long as you got $85, you can invest in this REIT. But different REITs are going to come in at different price points, so you'll have to check with each individual REIT to see how much it is currently trading for. Now, overall, if you're looking to diversify your portfolio into some real estate, you've honestly got two really solid options here between Vanguard REITs and Fundrise. But if you're investing for the long term, you might find more of what you're looking for with Fundrise, since they've been delivering consistent returns in that 9 to 12% range for the last number of years, whereas Vanguard REITs tend to be more volatile, again, with the stock market. But either way, both of these options have relatively low minimums that allow you to get started with not too much cash, so it might be worth a try out both, see which one makes more sense for you, which one you enjoy more, and then stick with that one going forward. But if you want to learn more about these two investment options, we have a full in-depth article over on our website, investingsimple.com. The best way to find that is to head over to Google, type in Fundrise versus Vanguard REIT, and click on the link for Investing Simple. We will see you over there.